So in the last video on Sunday, I talked about how I wanted to see upside on Tesla, SPX, and also IWM. And we did see upside in all three of those throughout this week and a lot of upside as well. I talked about the breakout because remember back here on Friday of last week, Tesla broke out of this mini downward trend line. And like I said, it is a very basic trend line, but it was a key break. And we also had the move supported by a lot of call flow as well. So we had a gap up the following day, a retest of the trend line. It never broke under, and then huge continuation the following day to the upside, and now we're all the way at my target, this trend line up here. We saw the mid 240s, we were able to fill the gaps from over here as well. We went way past that and now up to a key resistance all the way at 257, 258. So very nice move on Tesla, a nice bounce, nice continuation from the range. It's always great to see these simple setups whenever you have a breakout of a key downward trend line, also supported by call flow as well. Now, the next thing I do want to talk about is SPX. This had a massive move to the upside since that video that I showed on Sunday. We were able to break back within the broadening wedge pattern. I know there's a lot of lines on here. Basically, the blue line that I have right here and the blue line that I have over here, this is the broadening wedge pattern. It starts from back over here on both of these pivots, and you can see as we go along with time, it opens up a little bit more. We actually broke below it recently. However, we did get that break that I was looking for back within the pattern and back into my supply zone, this huge red box over here between 4,450 and 4,500. We had a clean break back into the range here, as you can see, with this massive 1 hour candle, followed by a lot of continuation afterwards to my main pivot over here of 4,525. We are entering a very interesting time period because we had the pop that I was looking for now, and it also happened very fast. So a lot of shorts were basically unraveled throughout this pop, and we're entering a time period where there's a potential short setup that could take us below the current low that we have from over here of roughly 4,330s on SPX. Now, there's going to be a time aspect to this. It's very difficult whenever you have such a large bullish move over the course of a couple days like we saw this week. It's very difficult for price to reverse that move immediately. So what we're going to see is based on tomorrow's close for the weekly, that's going to be telling on when this thing is ready to roll over, because personally, I do believe we will roll over and it will happen within the next couple weeks or so. This is totally in line with what I'm looking at structure wise at the moment for an eventual drop below the current low, like I just said, of these 4,330. So if there is a weekly close back within this supply zone and we're unable to hold above 4,500 by tomorrow's close, then there's a possibility that that drop can begin at some point next week. Otherwise, if we do close above it, it's probably going to be consolidation for a bit. We'll see consolidation next week. It is a shortened week. Remember, Monday is off, and that's actually when we'll post the next video. So instead of the Sunday video, it will be the Monday video. That's why we're doing it today on Thursday. So because it's a 4-day week, if we were to close tomorrow, let's say above this 4,500 level, we'll probably just see pretty choppy price action next week. And then the week after that, there's a potential short entry. Otherwise, if we can get back below, there's a possibility to short at some point next week. But at the moment, very strong bounce, very nice pop so far for the S&P 500 to the upside. Nice to see it continue a lot higher. And actually, we are amidst a head and shoulders pattern. Some of you guys were actually commenting that in the last video as well. This is something that I've been watching, but it's a bit difficult with the S&P 500 since head and shoulder patterns tend to be very obvious to people. But we do have the left shoulder over here, the head, and then the right shoulder would be forming. This would be a bit higher than normal, so you don't really want to see too much higher price discovery, especially into next week. That's why the weekly close is going to be key here tomorrow. Best case for bears, at least in the very short term, would be, if I go back to SPX here, would be to see a rejection from around 4,525 to 4,550 max. You don't really want to see price go past there for that head and shoulder to still be valid. And of course, this is a higher right shoulder than the current left shoulder is. But regardless, I do see more downside here in the future. It just is a matter of time until that happens. And of course, that weekly close tomorrow will give a lot of confirmation for a good time to enter shorts. But regardless, a very nice week for that long thesis on Tesla, SPX, you can see here, as well as IWM, which I'll show very quickly as well. This one, textbook accumulation pattern in the middle of the golden pocket for the fib sequence. So we're in the middle of the golden pocket over here on the hourly as well as daily. We also had a key downward trend line that started from February 2nd. That's the one I showed in the Sunday video. And we retested it twice actually to make a double bottom Then we had a nice pop over here. So this is what I was talking about based on Sunday's video. I was looking for a strong bounce from this accumulation range, and we did get that strong bounce. We were able to go above my 188.41 pivot. At the moment, mini head and shoulders here, as you can see, intraday on the 1 hour. So it's looking fairly weak, especially compared to the rest of the market like QQQ and SPY. So it's had a nice run so far, but it looks like it's about to start lagging just a bit. But still, regardless, a very nice move from 183 all the way up to 190 in only a couple days. So regardless, if we do see a pullback from here, this is a very strong accumulation zone around 183, especially off of this downward trend line. And like I just said, we are within the golden pocket in terms of Fibonacci. So if it does want to pull back from here, it's still a nice long thesis, I believe, going into the end of the year, as long as this range can hold. If this range can't hold, then it will fall quite a bit. There would be a flush under here, but at the moment, very nice support around this range. And I can't not talk about the fan favorite NVDA, especially with the flow that we've been seeing all week. I have the flow from Monday to today, so Thursday of this week, end of August, and I filtered it for above 1 million in premium. And as you scroll down, it is literally all calls. Even the red that you see on here, these aren't puts. These are just whales selling the calls that were likely up on their position because they've been buying them for the past week, just super, super aggressive. So as I scroll down, you can just see call, call, call. And even these red ones, like I just said, they are selling other calls that they were likely buying earlier in the week. And we've only went up since the start of the week. So they're likely taking profits on those positions. And even some of these from a couple of days ago, 1.3 million in premium, 1.5 million in premium, super far out the money, 485, also 500 strike, and close in terms of expiration for that October 20th date. These are aggressive orders, and they were consistent throughout the entire week, which really gives it a bullish emphasis. So I thought I'd look over NVIDIA's chart at the moment, because this thing has been on a tear for a very long time, ever since we had that major gap up. If you look over here at the daily chart, the big earnings that they had where we went up to all-time highs and then just continued even higher. And then recently they also had a good earnings. So right now we're back at a key supply zone, the supply zone that actually rejected after earnings that they had exactly 1 week ago. So by looking at this chart, I actually haven't looked at it before doing this video, so I'm just going to do it for you right now. Basically raw footage of me going through kind of how I like to chart, at least basic chart tactics that I use. But if you go over here, I'm going to click on the rectangle. I see a supply zone instantly on the daily chart. You can see right here, I'm going to connect it. I'll tell you why. Top is where we rejected after that gap up. So we know that this is a hard resistance. It was unable, buyers were unable to keep it up here, especially very long, because it sold off from the beginning of the day. Clearly there's a lot of sell pressure up here. So this is a supply zone. This box here will act as a supply zone. And the reason I drew it to the lower end is because of these wicks over here. We have 3 key wicks all around this range. So we know that there are sellers present around here. Also, you could see this large red candle sold off from the same exact spot as we sold off from over in this area. So this is a good bottom site for the supply zone. As you can see, we are in the middle of the supply zone currently. So we're actually back into it after rejecting a couple times around this range. We did get back into it, which is actually a bullish sign. However, there does need to be confirmation above in order to confirm a long signal, because as long as it's in it, there's still a lot of that sell pressure, kind of like we saw from back here on August 24th after earnings. There's still a lot of sell pressure in this range, so it's not a good idea to long at all. And even if you were interested in taking a short position, I actually wouldn't short it until there was confirmation below the box as well. So at the moment, I consider it more neutral, at least in terms of a bias, if I were to have to take a position on this. So I'd wait for confirmation on either side. Again, yes, it is very overextended, so taking longs, you just have to be very careful with how long you hold it. Make sure you adhere to your risk requirements, because it is very high up and things can turn around very quickly as well when you're this high up. But an hourly confirmation above here, roughly 502 to 503, not a bad idea for a long position intraday to potentially swing afterwards. Otherwise, if you were interested in going short, I just wait until confirmation below on the daily chart, actually below over here, because it can still pop back up from the lower end of this zone. But at the moment, this is a clear supply zone and the trend is still up at the moment. If you just draw a simple trend line from down here, this would be the main trend line. So we're still a ways away from touching this. If this broke in the future, then you'd see a lot of downside afterwards, potential flush actually, because it's such a key trend and we're so high up. But at the moment we are very high. And even if it did retest this anytime soon, it would probably have a very large bounce off the third retest of this level. So there's nothing to worry about at the moment. In terms of the short term, if you wanted to trade it, look for confirmation on either side of the supply zone. Again, hourly is good. Daily would be best, at least for the short side on this. business. And lastly, I do want to talk about the VIX here. If you remember, I have a target, or had a target, of sub 14 on the VIX that I shared, and look what happened here. As of yesterday and today, we did go sub 14 on the VIX. We had that hard rejection from my key trend line as well as pivot up here around 1760. After that, we had a drawdown and then a little pop around Jackson Hole. And after that, it's just been a complete destruction in terms of volatility, which is why I was very interested in why I mentioned as well in the videos around Jackson Hole, how volatility would likely unravel the days after Jackson Hole. So there still might be volatility around that date or maybe the day after, but soon after that, the following week would be perfect. And that's what ended up happening here. We did see a lot more downside in volatility. So a lot of that fear that we had previously during the drawdown in the S&P 500, as well as desire to have that protection heading into an event like Jackson Hole, especially after what happened last year, where the market collapsed by almost 3% in a day. We saw all of that unravel soon after, and we did go sub 14. We filled the gap, which was my target over here, which actually means that there's not too much fear at the moment. So again, going into that short thesis, especially going into the month of September, this is looking like a nice setup. It's just a matter of time at the moment. I will, of course, let you guys know my thoughts going forward on when I am looking to go short. But regardless, at the moment, very nice week overall, like I just said earlier, with that upside in IWM, Tesla, and SPY. And right now, just a waiting game. I'm going to check the weekly close tomorrow. Make sure you guys do that. If it's within my range over here, don't be looking at those scenarios. And other than that, I will see you guys next time on Monday for another video. So enjoy your long weekend.